Hi there, my name's Michelle Marsden and I run Marsden Accountants. And I'd just like to give you a little bit of a budget 2024 update. Well, what a budget it was. There was so much speculation around this budget, and a lot of what I predicted back a few weeks ago now has actually come true. Who knew? So, yeah, when you see the size of the document that HMRC release and the government release, you can see why so much of it does get leaked, I'll be honest. So I'm not a fortune teller. It just happens to be that actually I think so much of it gets leaked. And they leak things that aren't true just to make sure that everybody knows that not all of it is going to be true. So let's start with one of the income taxes. Now, income tax is one of those interesting ones that if you keep it the same as it always is, people are going to pay more tax because we've got inflation, we've got increase in the minimum wages, so people are going to start paying more tax. So yeah, the good news was it's frozen, but that's actually not good news because it means you'll be paying more tax. Making tax digital is also going to be brought in starting next year, no, the year after next, sorry. They've been threatening to do making tax digital for so long now, people have given up on it, but it is going to happen. And by the end of their parliament, they are saying it's going to be down to £20,000. So that means any business or landlord over £20,000 worth of income will have to start being in making tax digital. So we're on it at Marsland. So we've got software in place and had software in place for a long, long time now to make sure everybody is ready for that. But you can do bridging software as well. So don't panic if it's not you. It'll be fine. So yeah. So that's the income tax. Capital gains tax. Now, on capital gains tax, I'm going to talk about furnished holiday lettings first, actually, because this was from the previous government, but actually it's coming in 6th of April 25. Who knew? Well, I didn't know, but yeah, it's coming in now. You see, so this is going to mean that furnished holiday lets are going to lose out on some of the things that they're benefiting on at the moment. Now, one of the biggest ones of that is interest relief. Yeah. So the interest relief, basically, they're only going to get basic rate relief going forward. Yes, up to now, they've had full relief. They're not going to get any new capital allowances. And one of the biggest things is actually furnished holiday lets is being split like a business. You can split it any way you like. Now they're saying you can't. It has to be split based on ownership. The earnings won't count for your pension. So there's a lot of capital gains tax release. There's lots of little bits going on with this furnished holiday lets that we really don't like. All right. So just be warned, it's out there. Okay. So yeah, so that's the furnished holiday lets. Right. The rest of capital gains tax. So it was announced basically that the capital gains tax rates were going to go up. They're going to go up basically to 20% and 24. Sorry, the 10% is going up to 18%. So that's if you're a basic rate taxpayer, and the 20% is going to go up to 24%. So that's if you're a higher rate taxpayer. So this is what we've always had in property. Property have been 18 and 24% anyway for some time. So now it's just meaning that the rest of it will also be at that rate. You're still allowed to have £3,000 that you can make a profit on without paying tax. So that's £3,000 is staying the same at the moment, but that's been going down for a few years now. So one of the biggest changes in capital gains tax though is if you've got business and you're thinking of selling that business, currently up to £1 million, you'd be paying at 10% tax. Yeah. Now that is going to change to 14% and then it's going to go up to 18%. So if you've been thinking of selling, sooner might be better than later, but never let the tax tail wag the dog. All right. So if you're not thinking of selling, don't just do it just because of the case of it. I think a lot of people got caught out in this budget by doing things because of the rumours and actually found out that they needn't have done it. Yeah. So yeah, just watch that. Okay. That was capital gains tax. Right, so moving on to inheritance tax. Now, inheritance tax, actually, those thresholds, I can't even remember when those thresholds went up. From 325,000, it's staying the same and will be staying the same for a few more years yet. Now, this is going to bring more and more people into inheritance tax. Now, most people don't know they've got a problem until they die. Well, and then their relatives find out they've got a problem. But I'm finding that more and more clients, the older you get, the more and more you're getting into this threshold. Well, it will be, won't it? Because that threshold's been the same for so long, and property prices do go up. You know, your assets do go up unless you spend it all. That's why you get out of inheritance tax is spend it all. But unfortunately, most of us don't do that. So it's one of those things that I think as people get older, older, they will start to find that they're in inheritance tax more. And so they need to look at other ways of getting their money as tax efficiently as possible to the next generation. One of which was, if you had pensions, you put it into a pension, and then that was transferred to the next generation, inheritance tax free. That has disappeared or will be disappearing in a few years' time. So they reckon 8% of the population are going to be affected by this. That's quite a fair chunk, really, and that's at this moment in time. Just think what that's going to be like in 5, 10 years' time. So yeah, so they do reckon that quite a few people are going to be affected by this. The other thing that may affect you is if you're running a business, is at the moment you get business property relief, and that's going to be capped now at £1 million. So yeah, if your business is only worth up to £1 million, you get 100% tax relief, no problem. But anything over £1 million, you're going to pay 20% inheritance tax on, or your family will when you die. So yeah, so inheritance tax, no real changes, but just the odd tweak, and that pension thing could cost a few people a bit of money there. And just be careful with inheritance tax. Like I say, it can catch up on people, especially if you own property. So you go, oh, actually, I may have an inheritance tax problem. And once you get over a certain threshold, you start to lose some of your benefits as well. So in terms of some of the tax-free allowances. So moving swiftly on, national minimum wage. Yeah, I don't know why, but they've got into, all governments have got to do a little thing where they announce the new minimum wage the night before the budget. They've known about it for ages. Of course they have. They plan it out. It's bigger than inflation, and it's going up to £12.21 next April 2025. But on top of that, what they're trying to do is they're trying to bring the 18 to 20-year-olds in line a little bit more as well. So that's going up to £10. So that's quite a bigger increase. So just be wary. It's going to catch you out if you employ a lot of younger people. Now, talking of employing people, that's going to become more expensive. It's going to become more expensive for certain people. And I spoke to some people that do a payroll, and they say, oh my God, one of my clients is 27 grand type, cost them. Other people, no, it's not going to cost them at all. So it will depend. So there's a couple of things you need to know. Firstly, we all get an employer's allowance, or the small employers get an employer's allowance. It goes from £5,000. That'll be increased to 10,500. So that the government is hoping for a lot of small employers will bring them out of the equation of this. So although it'll look like it's costing them more, it won't. Okay, so that's one thing. But the second thing the government have done, they've reduced the £9,100 threshold down to 5,000. So, for instance, directors who have been paid possibly at 9,100 or 12,500-ish, will suddenly have to start paying more national insurance. So this will be brought down to 5,000. So more people are going to be brought into the national insurance thresholds, yeah, because of that. So that's one of the things that will happen. And then as it's been headlined in everywhere, employers' national insurance is going up from 13.8 to 15%. Yeah, a little tweak there, but actually that could cost some people quite a lot, or some employers quite a bit of money to employ extra people. So just be wary of it. Stamp duty. Yeah, this is one of my predictions. Yeah, stamp duty. It's a bit of an easy hit. You don't have to buy a second property, do you? Yeah. So they took that. Instead, I predicted 4%, but instead of going from 3% to 4%, they went from 3 to 5%. Why not make it a nice round figure? Hey ho. And that's what they did. The other thing that's going to hit on stamp duty is come next April 2025 with the stamp duty thresholds. They're going to be tweaking them back up again. Yeah, back down. So that basically it's going to currently 250k is going to go down to 125k. So actually that's going to bring more properties into stamp duty, and then also the first time buys from 425k is going to go down to 300k. So yeah, that's the stamp duty changes. So it was predictable, really, to be honest. Corporation tax. Corporation taxes, there's no change. Now, you may think that's good news, but actually, I'm starting to see now with a lot of the limited company businesses, this new threshold is starting to hit. So one of the things with corporation tax is if you earn a profit of up to £50,000, you'll pay at 19% because you're in small company, yeah? If, however, you have associated companies, that 50,000 is divided. So say you had two companies that associated, you get £25,000 for each, yeah? So that can mean one company can make a 50,000 profit and the other can make naught, yeah? And actually you'll be paying at the marginal rate. So on that one company, because you've gone over 25,000, you'll be paying 26.75%. They don't tell you this in any headlines, do they? No, they tell you the top rate is 25%. No, there's a marginal rate rate once you hit that 50,000 threshold, which, like I say, more associated companies, the more you dilute that associated the threshold anyway. So yeah, so small companies, and I say small, £50,000 is, it's a lovely profit to have, but actually for a lot of businesses now, £50,000 is too low. So a lot of people are going to be hit by this marginal rate of 26.75% because there is no changes. And the next level, when you only pay 25%, is 250k. Yeah, it's quite a big jump, isn't it? So yeah, watch out for that because I see that starting to hit people in their tax bills at the moment. All right. So that's corporation tax. No changes, but yeah, it's, it's one of those things. The previous changes are starting to kick in now. VAT, no real changes in VAT. We had an increase to 90,000 not long ago. The main change that everybody's been talking about is going to be coming is about the VAT on private school fees. That's been talked about quite a bit this year, and that is coming in. Business rates relief. There's some tweaking going on with the business rates and that. So just watch this space. There's some other tweaks as well in the administration of HMRC. And I'm going to do that in a separate video because that's not, although it's been released in the budget, it's not really a budget update. So thanks for listening, and let's hope that's the end of this budget for now. And they don't have to do any more tweaks, but let's see what happens. Time to shine.